All right. Good afternoon, traders. First off, let me apologize. I know that today's live session started a little later than normal. I normally start these sessions at 8 o'clock Eastern or 7 o'clock Central. And today I had a meeting that conflicted, so I went ahead and moved our live session back to 1 o'clock Eastern or 12 o'clock Central. Hopefully, for those of you that don't like to wake up early in the mornings, maybe, just maybe, this is better for you. I don't know. I'm a morning person, so I love the early morning sessions, but I know not everyone is. And of course, all the friends on the West Coast, that 8 o'clock Eastern time for you is really early. But without further ado, let me share my screen here and get started with the big picture look first. I'm going to share the SPX chart, the cash settled ES or S&P 500s. So I like going over the cash settled SPX to just get an idea of the bigger picture trend. You know, so much of my swing trading, I want to be aligned with the overall trend. And when we're talking about swing trading, I'm talking about the trend from the weekly chart all the way down to maybe a 4-hour chart. What is the overall trend? Now, if I consider the trend on a weekly chart, then these are trades that I'm going to be in for a couple of months, right? If I consider the trend on the daily chart, that's more for trades that I want to be in for a couple of weeks, maybe a month. And the 4-hour chart is the trend that I'm looking at as far as trades for 2 days to maybe 2 weeks. So that gives you a rough idea of how I look at trend compared to the amount of time to expiration for my contracts. So let me zoom out here and let's just look at this weekly trend over the last year. So I've zoomed out to April of 2025. This is when the market pulled back about 20%, and everyone was thinking we were going to crash, but I knew that we had a high time frame demand zone there, and I was actively buying this dip down at demand. Since then, we have been trending to the upside, making higher highs and higher lows until we created this new all-time high on SPX just above 7,000. Now, what has happened is we spent approximately a month and a half to 2 months just trading sideways. And then over the last couple of weeks, since the end of February, we have seen a couple of down weeks, right? Now, from the big picture perspective, measuring Fibonacci, measuring everything that I use, we are still in a bullish trend. We have not even pulled back to the 23.6 Fibonacci level. So everything that I go off of for a weekly chart, the market is still in that bullish trend. Now again, this is high time frame, so trades I would be looking to be in for a month, right, a couple months to all the way up to 6 months. So these are longer term type swing trades ideas if I'm looking at a weekly chart. Now, As far as where last week's candle brought us, it's actually a very impressive candle in the fact that we moved from a bearish golden profit area, a very big topping wick. This topping wick on last week's candle shows selling pressure. The topping wick on the week before shows selling pressure, and the week before that. So you can see that the week before that, though, it was really more an indecisive candle. We had a topping wick, but we also had a bottoming wick. The last 2 weeks, though, look different. And I want to point that out, that we popped up, we rallied on Monday into Tuesday, and it looked like maybe we were coming back up and, you know, maybe not making new all-time highs, but at least potentially testing the all-time high. And it's just not what happened. The selling pressure was too much in the bearish GP, and we sold off, and we actually closed near the lows on the week. Okay, that's important to understand when talking about swing trading, is that while we are in a bullish trending market on the weekly chart, we've seen a shift in the overall momentum. The dips aren't getting bought as quickly and as powerfully, and we're definitely experiencing selling pressure up here near the supply zone. Now let's take it to a daily time frame chart. Again, if I was measuring the weekly trend, we're in an uptrend. Yes, we've pulled back, but we are in an uptrending market. Now, when we get a pullback, I need to look at what levels are we pulling back into. Are those levels fresh, or are they tested? And where, if they have been tested, where are the areas of support inside of the demand zone that I could consider looking at for swing trades this week? I would say to myself, if this, then that. The if this would be, I just realized I wasn't sharing my camera, so let me share that real quick with you. The if statement would be this: if SPX pulls back to 6,600, this next area of support in the demand zone, then I want to go to my weekly watch list that we're going to create together today and look and see if those names are in their demand zone as well. If I have a confluence of the overall market being at this next level of support in the demand zone, and the names that I'm watching being in a demand zone, I love that sort of setup. Now, if 6602.99, I want to tell you why that's important to me here. It is a gap fill from the inside candle. So we are, okay, Monday or Sunday night into early Monday morning was our first test of this daily demand zone. And look at the pop that it received. That is the kind of price action I expect as a supply and demand trader when price hits a fresh demand zone. Now, you might say, yeah, but look, on Friday we hit that demand zone again and we didn't get that pop. Well, it's not the first time. So now we're on a hunt for big institution buy orders, order blocks to buy in this demand zone. And for me, the next potential level below 66.36 is going to be 66.03. That would be the gap fill down to this inside candle. The level below there that I will be paying attention to is 65.55, and then the bottom of this zone, 65.21. This is my major buy zone for this week for everything. For the swing trades I will be watching, for SPX potential swing trades, I can just trade the index itself, or I can do a combination of both. All right. As far as resistance goes, I have to mention the trendy yearly edge. Now that price is below 67.07, the upper yearly edge, it is resistance. Any pops up to this edge are a potential area that selling pressure could step in and drive price lower. That is important because if I'm in swing trades from this demand zone, I need to know when the SPX is getting up to this level to consider taking some profits and moving my stops to break even. As far as supply goes, that's going to be up here at 67.69 by 68.85. All right. Now let's look at the 4 hour. This really isn't going to change much. It's using the same daily buy zone, using the same levels in that daily buy zone, and it just so happens the 4 hour inside and down matches up with the daily inside and down. So from a 2 to 5 day time frame perspective for me this week and SPX, the levels that I'm looking to be a seller at are 67.75 by 68.45. The upper weekly edge, trendy edge here, is 68.20. As far as where I want to be a buyer, well, we're in that buy zone. What do I look for when price is in a buy zone, you might ask? I'm looking for confirmation. I want to see higher lows and a break above the body in order for me to get long in this tested zone. If you don't know exactly how I trade confirmation, then you need to join Trendy John and I this Wednesday for our webinar that we'll be doing. And more importantly, you need to sign up for our supply and demand 2026 evolution class, where John and I will spend about 4 to 5 hours teaching all about supply and demand trading, as well as what has evolutionized for us as supply and demand traders. And part of that education is going to be my confirmation process that I use daily to day trade SPX, and it has been very profitable for me and other traders in the SPX room. But I also use this for swing trading, and I'll explain that in the class. All right, so that is the overall market. From a shorter time frame perspective, I am willing to buy puts or go short in supply. I'm also willing to buy dips and go long in demand. For my longer term, a couple of months to 6 months time frame, I'm looking to buy a dip in demand zones. All right. Now, let's talk about where we have seen the strength in the market. I use coifin.com to get an idea of where that strength is at. And I'll show you just real quick. I look at this from a year, looking back over the last 365 days. I also look back over the last quarter, the last month, and the last week. That's going to give me a look under the hood. Under the hood of the market is these different sectors, okay? And the different sectors are important to me so that I can see where big money is taking their money from and exactly where in the market are they putting that capital to use. So when big money is taking their money out of, let's just look back over the last month, when they're taking their money out of certain stocks, these sectors down here would be at the bottom because big money is pulling capital out of them. And they rotate that money into these sectors that you see at the top. Now, I've already mentioned that overall, we're in a bullish market. So I want to stay focused for swing trade setups to the upside. But that doesn't mean that I'm going to buy every dip on an area of the market that's down here and showing weakness. No, what I want to do is buy a dip in the areas of the market that is showing strength. Okay, I want to be aligned with the big money, and that means I need to know under the hood where that money is potentially moving into when it moves out of the weaker areas in the market. All right, so from a yearly time frame perspective, not a lot has changed. I will say energy, 1, 2, 3, 4, 5, number 6 from a year to date look back. Honestly, much of last year, energy was all the way down at the bottom, and it has climbed its way up to the top now. That is important to note. But what's also important to note, if I hover over this and you look at the chart, you can see the energy just really consolidated from April of last year all the way until January of this year. So for about 8 or 9 months, energy just sat stuck. But since the new year, energy has caught a bid, right? And given the global conflict, the war with Iran, this makes complete sense because oil is so affected by that. But we have relative strength here in energy that we did not have much of last year. So I look at the yearly look back. I look at right now, I'm just looking at quarter to date because we're close enough to the end of the quarter. If we're not towards the end of the quarter, then I look at this 3-month look back, but right now it's really not going to change anything. And if you notice, the areas that you see here at the top are more risk off areas of the market. Utilities, consumer staples, think of things that customers are going to buy regardless of the economic environment, like toilet paper, for instance, or Coca-Cola and cigarettes. It's just, we as Americans, those things are going to be bought regardless of the economic conditions. When you see consumer staples, utilities, and energy towards the top, that means that overall we're on a more risk-off environment. You will see the big names down here, the financials, consumer discretionary, the big tech, these things that are now at the bottom earlier or end of last year, mid to end of last year, those were at the top. One thing I'll point out, if we are looking for an area of the market where tech is concerned, what is showing the most strength, and that's going to be your semiconductor sector, okay? All right. So anyway, I chart these out. I put these on a list and I know where my overall strength is at. Once I do that, I have a flexible grid of each one of those relatively strong sectors in the market with their top holdings. Once I get that information, then I want to pick the stars out of this set of names. What do I mean? I'm looking for the best looking charts. I don't want to necessarily pick Mondelez down here that just looks like a falling knife. Now, if I was wanting to trade this for longer term swings than what I'm talking about with you, sure, this is a possibility, but that's not what this session is about. These are swing trades I'm going to be in next week or maybe into April. All right, for the most part, the swing trade ideas I give you, I'm choosing March monthly expiration or April monthly expiration. That means I want to pick things that are above their daily EMA cloud or right inside of it. I want to look for that strength. So names that would make my watch list over here is names like Walmart or names like Target or names like Altria. These are the names that you will see on my watch list over here because they're relatively outperforming. Now, Costco chart looks great, but the trading account that I trade live in the trendy room at Simpler Trading, it is a small account. I trade from a small account in there. So Costco just is not affordable for me to swing trade in that account. So I don't have it on my list, but if you're trading from a larger account and you can afford the option premium on Costco, Costco looks like a great buy the dip opportunity right down here near this weekly edge. All right. So that's how I build my list. I'm looking at those relative outperforming areas of the market, such as oil exploration. Look at that chart. That is a beautiful bullish trend. That means names on this list that pull back to demand or support, I'm looking to buy the dip. So I have some of these top names on my watch list over here in XOP. Then I mentioned that if I'm looking for some potential tech related names, semiconductors is the best performing sector in there, and I want to look at the names that I like the charts the best. Now, AVGO is one that's finding or trying to find support at the daily 200. This is a big over under area for Broadcom right now. I went ahead and put it on my list so I can watch it at the daily 200. But if this thing flushes below that daily 200 and it becomes resistance, I would stay away from Broadcom to the upside for now, unless it was on a much higher time frame demand zone buy that I was looking to be in for 12 months or longer. Okay. MU, great looking chart showing relative strength across the board for the semiconductor names. MU is your strongest name. This name is also one that is just too expensive for my small account, but if you have a larger account and you're looking for an area to buy the dip on MU, they have earnings in 4 days from today, so March 18th. But this right down here at or around this monthly edge and weekly edge would be the buy the dip opportunity for me. All right. So what names did I put on my actual list? I put AVGO NVIDIA just because it's the big daddy and it is coming down to where it could see an initial bounce off off of this rising daily 200. Each pullback has given you an opportunity to go long off there. This would be a third test, so I would want to do this trade with confirmation, but we'll look at the chart and I'll give you that level. All right, apologies for that cough there. All right, so I have NVIDIA on my list, I have Intel on my list, and I did add AVGO to my list. All right, all that being said, I've already created this list by what is showing relative strength, and then I want to narrow this list sorry, I want to narrow this list down to 5 or 6 quality options, names to watch for potential swing trades next week. I mentioned AVGO. I'm going to give you the levels that I would be looking at on the daily chart. All right, AVGO, remember, has come into that daily 200. I would be looking to buy a dip right down here near 317.50, but I need to pay attention to where that daily 200 is at. You can easily add a daily 200 moving average onto your chart. That's free on most brokerage platforms. This blue dotted line would be that daily 200. So if AVGO can stay above this daily 200 right here at the monthly edge mid and the lower weekly edge, it's a buy the dip opportunity. If it falls below the daily 200 and cannot find support right in the area it's at now, I would say all the way down to about 320-ish, 317 and a half, then I believe price is headed to 307 to 287. All right, if we get a dip buy opportunity here this week, I would be trimming up near this cloud, this EMA cloud. First trim at about 330, then 337, and finally targeting supply right here at 343 by 362. You not only need to know where you want to be a buyer, you also need to know where you would be a seller. All right? So the levels on Broadcom this week I'm interested in buying with confirmation is going to be 325 to 317 and a half. I will mark this as a gray rectangle just so you know where I would be looking to buy a dip. Price is currently in there, but like I mentioned, it's right at the daily 200, so I would like to see confirmation in this zone to buy a dip, playing it back up to those levels. All right, up next, we're going to swing all the way from the semiconductor sector, and we're going to look at oil or energy names in ConocoPhillips. Now, I am not a momentum type trader. I don't buy things when they're at their highs. I am a dip buyer. I'm looking to buy a dip down near this lower weekly edge, down near this daily demand zone right in here. All right, so for me and ConocoPhillips, my buy the dip is going to come in at 112.40 to 107. I could potentially see buyers step in at this lower weekly edge, so that's where I would actually want to create my alert. and be alerted if we get a pullback on this bullish trending name in an area of the market that is currently leading. As far as targets go, I'm targeting 121 to 122 and a half on ConocoPhillips. Another oil name would be Chevron, CVX. This name set up beautifully. Last Saturday, I gave you this name and said the buy the dip was at 186 to 181.76. Look at how price pulled back into this zone on March the 10th, and look at the move out right to that 199 target. That's a beautiful example of how knowing where demand is at and knowing where you want to be a buyer can pay off, and pay off nicely. As far as the levels for this week, I'm not going to really change much except that my buy zone would move up just a little to 187 by 181.76, incorporating that lower weekly edge. Now, as far as where I would trim at, I would have to assume by running my Fibonacci's from this swing high down to my entry, I want to know about that halfway point or that bearish GP to potentially take a trim at. Then above that 192 or 193, I would be targeting 197 to 199. So I'm looking to be a buyer down here near 187, trimming at 192 to 193, and targeting 197 to 199. A stop is always, for me, a daily candle close below my zone. All right? All right, awesome. Duke is a utilities name. This is a sector in the market that is outperforming right now. Now, I had a buy zone on Duke for last week at 127 to 124, and price didn't make it down there. It did come down to the lower weekly edge, but it didn't make it to my buy zone. This week's lower weekly edge on Duke is 129-ish. So I'm going to go ahead, create my alert there, and watch price at this zone to see if I want to go ahead, engage, buy the dip in this zone, and have a tight stop on it before the ultimate buy zone for me. Okay, so I'm actually going to go to this monthly edge at 130. This would be a zone that I'm just watching. Ultimately, I would like to see a pullback to demand down here, but I will watch this zone this week for a potential buy the dip. 130 to 128 and a half. That is approximately $1.50 in risk. And as far as my targets go, that first target's going to be about 133, so that would be just over $3 reward, giving me a 2-for-1 risk to reward. And then I have some extension targets above. All right, 2 dip buy opportunities, 2 zones I would potentially look to buy the dip, first zone or second zone. Okay, GDX, I've left GDX on the chart for a reason, and I'm going to explain how when price falls into a demand zone and it just keeps falling and falling, and we get a candle that closes below the demand zone, this is when a zone is invalidated. Okay, it gave you an opportunity of about $7 to the upside here on Monday into Tuesday. But since then, it has just fallen like a hot rock, right? And it invalidated the demand zone. So I'm removing this demand zone from my chart. As a matter of fact, I'll just clear the entire drawing. Okay? Now, how do we find that lower demand zone where price could potentially be falling to? You want to look down, you want to look to the left, and you want to look for the inside and up candlestick structure. This is where price could be looking for buyers. 91.81 to 88.09 on GDX. All right, that is my next demand zone. Now, I would wait for confirmation or start a position here at the top, then wait for confirmation to add to full allocation. As far as a target zone, you have an inside and down candlestick structure right here at 107.5 by 117.17. That would be the ultimate target or the supply zone above that I would look to target on this dip buy. But there is resistance before this. Number one, you have a trendy edge resistance, and number two, you have an EMA cloud resistance, and I would also run Fibonacci to see where the resistance is and how these trim levels line up. And I like it. I like this trim level right here at the bear channel, and I like this trim level right before that bearish GP. Okay, so that's what the trade plan would look like for GDX, going long in demand, trimming, and ultimate target. GLD is another name I've watched all throughout this consolidation. We broke down below this 50 fib, and we have come very close to the low in gold for March. That level is 458.93. It's going to be interesting as far as what happens with price right here. One of the things that I like to do in gold is to trade it just for the week. And one of my favorite ways is to use the trendy edges. Now, I did not start a position in gold on Friday. Like sometimes I will if price pulls down to the next week's lower weekly edge. Confirmation kept me from doing that this week. I couldn't get the confirmation I'm looking for on smaller time frames to go long gold. So what I'm looking for this week is for price to reclaim the lower weekly edge. If I get the confirmation and reclaim of this lower weekly edge, then I'm looking to play gold up to 470 and ultimately 476 by 481. All right, that would be my target zone. So again, for gold, just trading it based on the trendy edges. I'm looking to buy a dip. You could use a day trading type chart or this higher time frame chart, but I would like to see a higher low and a break above to go long, trimming and target. All right, so that's going to be my plan for gold. The first thing, the first alert I'm going to create is going to be a reclaim of that lower weekly edge. If price gets above there, I know that we have reclaimed the lower weekly edge and I'm looking to trade it to the upside. Now let's look at Intel. This was a name in the semiconductor sector that I said I would be interested in potentially going long from demand. The demand zone is down here 44.24 to 38.95. This is a wider zone. I would give myself more time to expiration, choosing the April monthlies. As far as targets go, 47.21, 50.51, and 53.45 would be my targets back to the upside in Intel. Kinder Morgan is another name. I had a buy zone on Kinder Morgan here at 32.29 to 31.67. I didn't get the buy opportunity last week, but we did create demand here at or around 32.91. So I can watch this name at this level, but my buy zone is still going to stay where I had it at 32.29. As far as targets to the upside, 33.77, then 34.80. All right, I will watch price in this area. It's very small, but you don't have a big daily ATR on this name. It only moves about 60 cents a day. This would be a zone that I would watch just based on this lower weekly edge. This would be a trim and a target. Okay, if price pulls back to this demand zone that has been tested, this would be another area I would look to buy the dip. All right, let's look at Altria. This is a consumer staple name that is popular to trade during economic times as this. I did not get a pullback to my buy zone. I did get a pullback to the lower weekly edge. Now we have created an area of support right here at about 66.5 to 65.5. So just less than $1 risk in this little support area. I have a monthly edge mid from the trendy edge indicator and a lower weekly edge. This is a buy zone. About $1 risk. As far as the reward goes, going to be about $1.50. And then this supply zone is my next target to the upside on Altria. If this zone breaks, then I'm definitely looking to be a buyer down here. All right. Next up is NEE. This is a utilities name. NEE is actually one on Monday. I got an alert for, and I was ready to make this trade, looking for confirmation. That was probably a mistake on my part. I considered this test of the zone, and so I was being conservative. If I had started the position right there at 89.73, you can see it would have paid off nicely to my first target and above, but I didn't do that, and that's okay. I'm all right with missing some trades. It happens. All right, but I want to be prepared again next week to potentially buy the dip at the lower weekly edge or this demand zone, playing it up to 93, 94.62, and 95.91. All right, communications name here. Communication sector, as far as a monthly look back, is showing some relative strength. So, first off, please note, Netflix is below this daily 200. That is bearish as far as longer term goes, but I'm playing a relief bounce. A relief bounce looks like this. When you run Fibonacci's from that high to that low, I'm playing the bounce up into 98 by 108. All right, this is the area that I'm targeting. I'm not looking for Netflix to make new all-time highs on this swing trade idea. I'm simply looking to play a bounce up to 98 to 108. All right, Here is the first zone, 94.42 to 90 and a half, playing it up to 98 to 108. If this zone breaks, I would erase it from my chart. This is simply a bull channel on this nice move up. The next zone that I really like for a buy the dip opportunity, because I have a lower yearly edge right here, 88 to 84 is my next zone to buy a dip. All right. NVIDIA, just because NVIDIA is the semiconductor name that everyone likes to trade. NVIDIA has pulled back to this rising 200. It has provided nice bounces from it, and it is still lining up in a demand zone. Now this zone has been tested multiple times, guys, but the NVIDIA buy the dip remains at about 177 to 170, and then trimming at about 184 to 186, and finally 191 to 198. All right, let's look at Occidental. This is an oil name. Actually, I have shares of this name. That's what these drawings are all about. I did get a trim here at $59 a couple of days ago on my shares of Occidental. But let's chart out a daily chart here so that I can give you swing trade idea for Occidental. All right, look at the nice bullish move. We consolidated, we moved up, we consolidated, and then we really just kind of have gapped up, slight pullback, gap up. Are we going to get slight pullback? That's what I'm looking for. I'm looking to buy a dip, and I'm watching this area right in here. Basically that lower weekly edge by this gap right in here. Okay? 5308 to 4981. That lines up with a lot of things. It lines up with my lower weekly edge, a monthly edge, a yearly edge, and of course this inside and up candlestick structure. That's why I'm choosing 53 to 49.81 to potentially buy a dip in Occidental. As far as targets go, 58.36 is your upper weekly edge, playing this trade edge to edge over next week would be a nice $5 return right there for a risk of $3.5. Not bad. As far as targets above there, I need to look back more than 1 year because Occidental has higher time look back. If I look back further, I will see that I have supply zones above where price is currently at. All right, so if price is currently right here, I'm looking up and left to find areas where price consolidated and then we get a big drop. All right, so if I look at and I take these topping wicks into consideration and look for the inside and down candlestick structure, I can build a zone, a target zone for Occidental from my buy zone, okay? And that's what I'm doing here to give me a target on a swing trade. All right, so now let's zoom back over and give you those potential targets. 58.36 and then 61.35 to 64.76. So this is where I would look to buy a dip and put a stop below. That would be a daily candle close below. And then I'm looking to trim and target these areas here, an upper weekly edge, and then the supply zone. All right. All right, very cool. While we're involved in a war right now, RTX Raytheon is potentially a buy the dip opportunity, as is the next name, SHLD, which is a defense tech sector. They benefit typically from conflict, and that's what we're dealing with right now. So, Raytheon actually pulled back to a bullish golden profit area here, and it has pulled back there. It pulled back there on Thursday, and then on Friday again hit that 618, that golden Fibonacci level, and we got a nice rally back up to the 50 right here. Now you do have resistance at 207, and you can see that it is definitely resistance. Then above there, my next target would be the upper weekly edge this week at 211 by 214 and a half. So initial rejection is, I would expect right here at about 207. That doesn't have the best risk to reward right now, which is why I didn't take a trade in Raytheon. I will continue to watch this name, but it's not going to be a top priority for me. Now, a pullback to this area that price has not revisited, this area where it was the bottom of a choppy range, this is where I'm more interested in potentially buying a dip in Raytheon. All right, so I'm going to set my alert there, but I will just point out the fact that so far this gray zone has been holding as support. SHLD is another name that is potentially a trade. I want a alert here back at 74.2-ish to watch price action there. My demand zone is this inside and up candlestick structure here on a 4-hour chart. The thing is about this name is it's gotten very, very stuck in a range. So I've got the alert back down at 74.20, but I would do just a starter type position there, and then I would add to full allocation in that buy zone. As far as targets go, $75 to $76, I would expect some rejection, and then 77.40 by 81 are my next targets. All right, let's look at Southern Energy. This is a utility name that does well when the market is pulling back, and you can see it's in supply. That means I'm not looking to go long here. My buy zone is going to be back at 95.15 or thereabouts. I want to create an alert so that I will know if price pulls back. If price pulls back to this area and I'm buying the dip here, I know that I have about $1.50 of risk. As far as reward, this monthly edge would be resistance, and it's about $1.50, $1.75 above, but then ultimately targeting the supply zone again all the way up to the top of this zone of almost 101. AT&T is a name that is in the communications sector. It did fall below this demand zone here, but it created a lower zone right here, inside and up. I'm going to use just the top of that inside candle, and then I'm going to mark the bottom. But notice that I have a monthly edge just below there. When that happens, I like to move the bottom of that zone down so that indicator is part of my buy zone. That means for this week, what I'm watching on AT&T is a dip into set 27.40 to 26.40, and then I'm looking to play it up to 28.17, then 28.86 by 29.79. All right? All right, let's look at Target. This is a consumer staple name that has pulled back to a demand zone and a place that we could look to buy a dip potentially. As far as the targets go, I'm just going to put a trim here at kind of this cliff, right? That price comes up to rejects, comes up to rejects. That's going to be that first target. Here's my buy zone. You got a risk of about 475 and a almost 1-for-1 risk to reward here to this first target. Then the target above 124.37, but ultimately I would be looking for this supply zone above 134 and a half on target. Now, it has been in and out of an ideal squeeze on the daily time frame. I'm watching the histogram. I would love to see this thing roll back up to these cyan bars and catch some momentum to the upside from this demand zone. That's when, if this squeeze could fire to the upside, that's when I would be looking for this 134 to 137 target up here. So I am watching target for a potential dip buy down at 116 to 111. Let's look at Verizon. This is a name that if you don't have a lot of patience, it's probably not the name to trade. It doesn't have a huge daily ATR for sure, but it is in a very strong bullish trend. All right. You see the gap up right here after Verizon consolidated in this area. This is the imbalance on this name. It's also lining up with the daily 200 basically, and a yearly edge mid. So what does that mean? This is a higher time frame buy zone. But where would I look as far as a trade that I was going to be in for a couple of months? I would look in this area where we created the inside nut, and I'm going to bring that just under that body of that imbalance candle and tell you that my zone for Verizon to potentially buy a dip at is going to be here at 47.18 to 45.82. Now, if I get this kind of dip to buy on Verizon and I'm trading it back up here to where it's camped out right now, notice that's $4 to the reward. You have to pay attention and know where the weekly ATR is or the monthly ATR. The monthly ATR on Verizon is that $4 mark. That means if I'm taking a trade from here and it moves its average trading range, it's going to take 1 month to get to target. So I want to buy 1 or 2 months, giving myself plenty of time to target. Okay? All right, let's look at Williams. This is another oil name. It is right at an area of support. I'm watching this name for confirmation to go long and looking to trim at 75 to 76.42 and then 78 and a half. All right. All right, up next is Walmart. This is a name that in the trendy room here at Simpler, we are in this thing from equity type of position. it came into support here last week and it just camped out in that support until we had a big move Thursday and Friday. Problem is, it's come up to resistance again. Here is the top of that resistance. So I'm not buying here. It would be a dip buy back here and then trimming here and ultimately looking for 133 to 134. All right. So that's an idea for Walmart to play consumer staples. ExxonMobil is the last one I'm going to talk about. Now understand, I would not be taking every single one of these trade ideas. I'm looking for 2 to 5 good setups. So I have my alerts set and I will initiate swing trades as the market and these names are in demand or demand zones. Okay, I want to see good market conditions before I'm willing to put a lot of my capital into swing trading. I mentioned back in January that my focus would mainly be with day trading because of the market conditions that I was expecting during this first quarter. That has served me very, very well, guys. I have had a couple of swing trade losers, but overall, the swing trades I have been in have been profitable. But a vast majority of my trading has been day trading SPX and XSP this year. I'm green on the year, and I'm proud of that because it has not been an easy trading environment. Not that trading is ever really easy, but there's been a lot of factors this year that I believe has made it even a little more difficult. So that being said, every one of these names do not equal a trade for me. I'm looking for 2 to 5 good setups. All right. The ExxonMobil buy the dip zone that worked very, very well last week, just like the Chevron one, is 151 to 147.86, trimming at 154.71, again at 158 to let's just say 160, and then extension targets above. Okay? Awesome. Well, we are at the good old 1 hour mark. And so I see that we had a question about what are the yellow levels. And Mary Jane, thank you for answering that question in the chat. I love it when the Trendy family is here on YouTube with me. We have the absolute best community of traders without a doubt. It's just amazing. If you're trading alone, trading can be very lonely, right? I encourage you to come check out the Trendy Trading Room or SPX Room at Simpler Trading. Join John and myself and our community of traders like Mary Jane. We're here supporting each other, coming up with great trade ideas and trading the markets together day after day after day. So if you do not have a community to trade with, come check us out. I believe it would 100% be worth your time. All right. Let's see. Bustle says this year has been amazing to trade. I'll sure miss volatility when VIX normalizes back to less than 16. I agree, Bustle. The VIX being, what did we close at yesterday? I believe 26 or something like that. Let me see. 27. Yeah. The volatility definitely gives some crazy fast day trading moves where I scalp trade SPX and XSP. I mean, I can make $500 a contract in less than a minute. It has been truly amazing. But no matter what happens in the market, the key, guys, is that supply and demand, I believe, is the answer for any market conditions. And I'm really glad that that's what I trade, that Trendy John taught me to trade supply and demand. And now I am happy that I am teaching all of you. So, if you haven't yet, please give this video a like. I would sure appreciate it. And I look forward to seeing you in the next video. Y'all have a great week. And if you have any questions, put them in the comments. I'm always happy to answer them. All right? Much love to